Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial world of Battalion Oil Corporation. And let me tell you, it's a bit like watching a tightrope walker without a net. A bit of a financial drama, if you will. We will be going over a notice they received that could impact the price of their stock. So hold on to your seats and subscribe for more content and join our Discord in the description. Battalion Oil Corporation, a company you might find listed on the NYSE American under the ticker BATL, just filed a report because they got a warning from the stock exchange. This report, called an 8K, isn't about good news. Sadly, it's more like a we need to explain something important kind of document. The date of this earliest event reported being May 30, 2025. Essentially, the NYSE American sent them a letter saying they're not following the rules to stay listed on the exchange. Think of it like this. To keep playing in the stock market's big leagues, you have to meet certain financial standards. Battalion Oil isn't currently measuring up. The problem boils down to two main points, as outlined in what's called the NYSE American Company Guide. The first point is about stockholders' equity, which is like the company's net worth. The exchange requires a company to have at least $2 million in stockholders' equity if they've had losses in 2 of the last 3 years. They need to have $4 million or more in stockholders' equity. If they've had losses in 2 of the last 3 years, they need to have $4 million or more in stockholders' equity. Here's the kicker. Battalion Oil reported negative stockholders' equity, specifically negative $1.8 million as of March 31, 2025. Plus, they've had losses in 3 of the last 4 fiscal years ending December 31, 2024. This is not a good look for Battalion Oil and is the core of their financial difficulties. To avoid being kicked off the stock exchange, Battalion Oil has to submit a plan by June 30, 2025, which details how they're going to get back on track by November 30, 2026. The plan needs to have specific goals, financial forecasts for each quarter, and details on any big moves they plan to make. If the NYSE American accepts Battalion Oil's plan, the company gets some time to turn things around. During this period, the stock exchange will keep a close eye on them. But if the plan isn't submitted, isn't good enough, or if Battalion Oil doesn't make enough progress, they could be delisted. Delisting is when the stock exchange removes a company's stock from being traded on their exchange. This can be a major blow to a company. For now, Battalion Oil stock will continue to trade on the NYSE American under the symbol BATL. But this is all dependent on them meeting the other requirements of the exchange and, of course, executing their plan we just mentioned. The notice from the NYSE American doesn't change Battalion Oil's day-to-day operations or their obligation to report to the Securities and Exchange Commission. The report outlines the potential consequences of being delisted. First, it could make it harder to buy and sell their stock, and the stock price could drop. Second, fewer investors might want to invest in the company, which would make it harder for them to raise money. Third, it could limit their ability to offer and sell stock freely, which would make it harder to access the public markets. And fourth, it could make it harder to access the public markets. And fourth, it could make it harder to access the public markets. And fourth, it could make it harder to access the public markets. And fourth, it could make it harder to access the public markets. And fourth, it could make it harder to access the public markets. And fourth, it could make it harder to access the public markets. And fourth, it could make it harder to access the public markets. And fourth, it could make it harder to access the public markets. And fourth, it could make it harder to give employees stock options or other equity-based incentives. Now let's dive into a more general and less obvious opinion about this specific document. Battalion Oil is walking a financial tightrope. The company needs to quickly create and execute a plan to improve its financial standing. This plan needs to increase its stockholders' equity, which is basically its net worth, and ensure they are meeting the standards to remain listed. Otherwise, Battalion Oil will be delisted. The fact that the company's stockholder equity is negative raises concerns. The negative balance is an indication that the company's liabilities exceed its assets. Without quick action, Battalion Oil could find itself in a deeper financial hole. One of the things that could happen is that investors would be less willing to buy shares and the company would be unable to raise capital. This could reduce the ability to offer equity incentives, which are often used to attract and retain talented employees. In conclusion, Battalion Oil's situation is critical. They need a solid plan and fast. The next few months will be a major test for the company's leadership and its ability to navigate these financial troubles. Alright, that's our breakdown of Battalion Oil's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.